It's 9:50 a.m. Pacific Daylight Time. It is the 22nd day of September 2025, and this is episode 1173 of Bitcoin. And, well, I told you that Semler Scientific was going to be one of the companies to survive. It's just not going to survive the way that I thought it was going to survive as a Bitcoin Treasury company. There's actually some pretty big news about what's going on with Semler Scientific today. So stick with me because you're here for all the news you can use about Bitcoin and more. I got Metaplanet on deck as well as, well, we are going to look at some price action on Bitcoin because I know some people out there are worried about it. Cointelegraph, generally speaking, when a liquidation the size that we saw this morning and late last night comes in, they usually have a pretty good piece about it. So I will, kind of renege on my promise that I never talk about price because I know people are worried. I don't know why you're worried, but it's there. Okay. So I promise you I will cover it. FTX is back in the news, and I want to be very clear about what's not being said when we get FTX news, because I think it's kind of reprehensible. So I want to sew that crap up. And then on the second side of the show, Bolivia is in the news. It's going to be it's kind of interesting because there's some foreign companies in Bolivia, not Bolivian companies, like foreign to Bolivia. And they are making a change in how they take payments. The US and the UK are teaming up on crypto. Vancouver, well, one of their what do you call them? Charities is going to start taking Bitcoin. And then strategy, well, strategy is strategy. But let's start with Metaplanet this morning. Metaplanet buys the dip, securing a massive Bitcoin position as price stays below $113,000. Tokyo listed Metaplanet has acquired 5,419 Bitcoin worth approximately $632.5 million, making it the world's fifth largest corporate Bitcoin holder as the Bitcoin price hovers just below $113,000. The company purchased the Bitcoin at an average price of $116,724 per coin, which means that they've, in the very, very short term, have kind of lost their ass on that buy. But this was according to disclosure filed with the Tokyo Stock Exchange on Monday. The acquisition brings Metaplanet's total holdings to 25,555 Bitcoin acquired for $2.7 billion with an average cost basis of $106,065 per Bitcoin. So from that standpoint, they're still treading water. Quote, please note, and this is important, okay? Hold on to your ass, because Dylan LeClaire reminds us, quote, please note this purchase is just the first tranche. And that was indeed Metaplanet's head of Bitcoin strategy, Dylan LeClaire, writing on X, referring to the company's recently raised $1.4 billion that was intended for Bitcoin acquisitions. The purchase positions Metaplanet ahead of Bullish, which is the name of a company, to become the fifth largest corporate Bitcoin holder globally, trailing only Strategy, Marathon Digital, 21, and Bitcoin Standard Treasury Company. The move comes as corporate Bitcoin Treasury operations continue to expand rapidly, with new companies entering the space almost daily. The latest acquisition represents significant progress towards Metaplanet's ambitious targets, achieving 85.2% of its year-end 2025 goal of 30,000 Bitcoin and advancing towards its 2026 target of 100,000 coins. The company has demonstrated strong performance metrics with BTC yield. reaching 95.6% in the first quarter of 2025 and 129% in the second quarter of 2025. I'm just a word about that. That's not a performance. It's not a performance. It is the case that companies for the longest time should have really been leveraging their balance sheet in fundamentally positive ways, not being stupid, okay? But for the longest time, companies just said, hey, here's the cash on our balance sheet. And they really never looked at it as an agent of change. Not really. I mean, it was like, hey, this is our operating fund. This is how we pay our people. We got to make sure that we've got a positive balance here. And it was great for a couple of aspects, but it really wasn't until Semler come along and says, hey, we should probably leverage our balance sheet in many more ways than we have been as companies across the board, at least in the Western civilization, right? So from that standpoint, Semler has actually done some pretty good things. I mean, he's actually made companies look at their balance sheet as much more of an asset than they ever thought that they had. However, let me come back to when they say things like this. The company, Metaplanet in this case, has demonstrated strong performance metrics with BTC yield. That's not performance. That's the performance of when you bought an asset versus how that asset external to you performs. It has no bearing whatsoever on the performance of your company. Does Metaplanet actually have any other income? Because none of these news stories ever talk about that. All it looks like to me is that they were pretty much a failed hotel management company and had some cash on their balance sheet and figured, what the hell, let's do what Semler's doing. We'll exchange all of our cash into Bitcoin, and that gives us street credibility to the point that we can sell shares and use that money to buy more Bitcoin, and off to the Bitcoin Treasury race as we go. I see no evidence whatsoever that Metaplanet has any goods or services for sale any longer. If I'm wrong about that, I'm begging you to please correct me and send me what it is that you have that says, no, this is how they make income above and beyond selling new shares that they've printed up for money to buy Bitcoin. If you've got that information, believe me, I want that information. I haven't been able to find it. I can't see what Metaplanet does. And this is kind of a theme for the day. It is all the information in these news stories that I bring you Monday through Friday. It's what they don't say that is starting to very much concern me. When we talk about these Bitcoin Treasury strategy companies, what we don't know is, well, do you have a product for sale at this point? What's your non-Bitcoin related revenue? And I mean, if you're selling shares and people are buying those shares, but you're using that money to buy Bitcoin, that I don't want that. I mean, if you want to do it, hey, that's fine. I'm just saying, but where is your other income? Income not related at all in any way, shape, form, fashion, or function to Bitcoin. And I'm not finding it. As far as I know, Strategy stopped selling any kind of software. And yet, story after story just talks about Strategy and their Bitcoin. But do they make any money at all? Do they have any recurring licensing fees as an income stream? And I can't find that information either. It just looks like these are just dead companies. And I don't like it. I can't help it. I don't like it. I don't mean to be like a doomer or anything like that, but I don't like it. These companies need to have actual solid revenue and bolster their company's name, access to credit, and all that with Bitcoin on their balance sheet. And if they were to do that, I think we'd be in a much better position. But alas, we now get into the Semler scientific news. And like I said, I knew Semler was going to be one of the ones to survive. I just I didn't think this was not on my bingo card. Strive, the company, acquires Semler Scientific in landmark Bitcoin Treasury deal. Nick Ward from Bitcoin Magazine. On September 22nd, 2025, two Bitcoin for Corporation members announced a transformative move in the evolution of corporate Bitcoin adoption. Strive Incorporated, an executive member of the Bitcoin for Corporations, which I guess it's a club and you ain't in it, entered into a definitive agreement to acquire Semler Scientific Incorporated, which is a premier member of BFC, in an all-stock transaction. The deal represents one of the first major consolidations between publicly traded Bitcoin treasury companies, signaling a new phase of maturity in this emerging asset class. For corporations, capital allocators, and market observers, this merger underscores how Bitcoin is no longer a peripheral balance sheet entry. It is becoming the foundation for strategic growth, capital structure innovation, and shareholder value creation. So the transaction delivers a 210% premium to Semler Scientific shareholders. Good God. With each Semler share exchanged for 21.05 Strive Class A shares. Alongside the merger announcement, Strive revealed the purchase of 5,816 Bitcoin for $675 million at an average price of $116,047 per Bitcoin, bringing its treasury to 5,886 Bitcoin. Upon closing, the combined company will control more than 10,900 Bitcoin, placing it firmly among the largest corporate holders globally. Leadership continuity is assured, with Strive's management and board of directors remaining in place, and Semler's executive chairman, Eric Semler, joining Strive's board. One of the most compelling aspects of this deal lies in Strive's declared capital strategy. Unlike debt-driven accumulation models pioneered by Strategy, Strive intends to rely exclusively on perpetual preferred equity to finance Bitcoin purchases. This preferred equity-only model is designed to eliminate the refinancing risks that accompany traditional debt maturities. By sidestepping the need to roll over debt in volatile markets, Strive is positioning itself as a more stable, long-term accumulator of the Bitcoin. Comparisons highlight just how differentiated corporate Bitcoin strategies are becoming. Strategies leaned heavily on convertible debt to build scale. Metaplanet in Japan has innovated with moving strike warrants and retail participation structures. The blockchain group in Europe has relied on Bitcoin-denominated bonds. Strive's model adds another tool to the playbook: equity instruments engineered to maximize Bitcoin per share while avoiding balance sheet fragility. That two BFC members are at the center of this landmark transaction speaks volumes about the momentum within our network. Strive, an executive member of the BFC, has pioneered the concept of a publicly traded asset management company with Bitcoin as its treasury backbone. Its mandate has been explicit: outperform Bitcoin itself by growing Bitcoin per share through innovative financing. Semler Scientific, a premier member of the BFC, was the second U.S. public company to adopt Bitcoin as its primary treasury reserve asset. By financing accumulation through both equity issuance and cash flows from a profitable healthcare business, thank you, for the love of God, from a profitable healthcare business, Semler built a dual strategy blending treasury innovation with operating income. Together, these companies exemplify how members of the BFC ecosystem are not only adopting Bitcoin, but also creating entirely new corporate archetypes in the process. Pausing just to say, the word cannibalization just comes up in my head, but that's probably just me being a tinfoil hatter. Continuing on, while the combined company will emerge as a scaled Bitcoin accumulator, Semler brings more than its treasury. Its diagnostics business has long been profitable, anchored by its FDA-cleared QuantaFlo system for detecting peripheral arterial disease. Post-merger, Strive intends to explore monetizing or distributing this diagnostics unit, freeing capital for redeployment or providing direct value to shareholders. The combined company also highlighted ambitions to expand into preventative diagnostics and wellness. The lesson for corporations is clear. Pursuing a Bitcoin treasury strategy does not mean abandoning productive businesses. Oh, thank you. I needed somebody else to confirm that I'm not insane. Continuing, instead, Bitcoin can serve as the anchor asset while operating units generate optionality, whether through spin-offs, monetization, or reinvestment. The 210% premium offered to Semler shareholders is a powerful signal of investor appetite. It demonstrates that markets are willing to reward corporate balance sheets anchored in Bitcoin at levels far beyond traditional operating multiples. This premium sets a new benchmark for how Bitcoin treasury companies may be valued going forward. It also illustrates a new pathway for growth, mergers and acquisitions as a mechanism for rapidly scaling your Bitcoin holdings alongside equity offerings and preferred structures. Wall Street is beginning to recognize Bitcoin treasuries as not just novel strategies, but as capital engines capable of delivering outsized shareholder returns. The leadership continuity at Strive ensures strategic stability, while Eric Semler's addition to the board strengthens the combined entity's depth of experience. Strive brings its asset management expertise, while Semler contributes years of operating success and a record of being one of the earliest U.S. corporate adopters of Bitcoin. This merger creates a leadership team that spans both finance and healthcare, united by a common belief in Bitcoin as the foundation of corporate strategy. So what are the implications of corporate treasuries now? Well, scale clearly matters. Controlling more than 10,900 Bitcoin gives the combined company strategic relevance. Capital structure and innovation is key. Preferred equity models can reduce risk while maintaining access to capital. Premiums are indeed achievable. Markets are rewarding bold balance sheet strategies, as evidenced by the 210% uplift for Semler shareholders. Optionality creates resilience. Combining Bitcoin accumulation with operating businesses can offer shareholders both financial and strategic upside. It's not just about holding Bitcoin, it's about engineering corporate structures to turn Bitcoin into a competitive advantage. The Strive Semler deal marks the beginning for what could be a wave of consolidation. Yeah, it's coming, people, and it's coming fast. A wave of consolidation in the Bitcoin treasury sector. As more public companies adopt Bitcoin strategies, mergers may become an increasingly attractive way to scale holdings quickly, reduce competition, and capture interest of investors. The combined entity now sits among the top tier of Bitcoin corporate treasury holders alongside Strategy, Metaplanet, and the Blockchain Group. This competitive layer of Bitcoin native companies is racing to accumulate, refine capital models, and prove to shareholders that Bitcoin per share growth is the ultimate measure of success. Pausing to say, no, it's not. Stop saying dumb things like that. I think that's just dumb. But the conclusion is that this is all more than a merger, according to Bitcoin Magazine, because this transaction is more than a headline. It's a marker of Bitcoin's deepening role in global capital markets and corporate finance. Strive and Semler Scientific, both members of the BFC network, are showcasing how corporations can not only adopt Bitcoin, but use it to reshape capital structures, investor relationships, and operating strategies. For corporate leaders watching closely, the lesson is clear. Bitcoin is no longer an experiment on the balance sheet. It is the foundation of bold corporate strategy, capable of driving shareholder premiums and fueling innovation, as well as setting new standards for value creation. As always, BFC will continue to track, analyze, and equip corporations with the tools and frameworks to navigate this accelerating landscape. So this is This is bad and good news. This is bad and good news. It just is. It's good news that there's at least some people that exist on this planet that understand that if you're a company that has no excess, or rather no revenue whatsoever, aside from printing shares and selling it to dweebs so that you can buy more Bitcoin, you've got a fucking problem. I'm sorry to say it that way, but it is. This is not good, right? You have to have that's why I liked Semler. And that's why I still like Semler. Strive has actually made the correct play. They've bought a business that even without its Bitcoin standing on its balance sheet, it is a profitable business. Now, Semler was smart. They bought Bitcoin. They continued to buy Bitcoin. They continue to be a operational healthcare company with real net positive revenue. And they use some of that to buy Bitcoin. And they also participate in the selling of the shares to buy Bitcoin as well. But they're not like hair on fire running around the middle of the street about it like Strategy and some of these other people are, right? So it's as we move forward in this landscape, it's not enough to have Bitcoin on your balance sheet to survive. If that's all you do, you will not survive. Somebody will come gobble you up because they see a whole lot of Bitcoin that they can lay their hands on with only a few meetings and a couple of contracts and a few lawyers. It's like it's an easy way to buy a lot of Bitcoin all at once. But it's this whole thing though is bad because we keep getting the messaging of all these seemingly failed companies that are only alive right now because of the Bitcoin that's on their balance sheet. That's not healthy for Bitcoin, and it's certainly, it's a lot more unhealthy for the company than it is for actual Bitcoin, because Bitcoin exists in a much larger connected network than any one of these siloed companies are. But as we move forward, we're going to see acquisition after acquisition after acquisition, and it would not surprise me if Strive ends up being being on top. Now, what does this mean for Strategy? What can Strategy do at this point to start generating actual real world revenue other than printing shares and selling it to dweebs so that they can buy more Bitcoin? They're going to have to go into finance. That is their only mechanism of survival at this point. Because honestly, we can say what we want about Michael Saylor, but he kind of knows how to do this. He kind of understands financing. So when you've got that much bulk Bitcoins chilling out on your balance sheet, and you have the attitude of leveraging your balance sheet as deployable capital to grow the balance sheet to begin with, the only thing that Michael Saylor has in front of him is becoming some kind of financier, whether it's like straight up bank loans that can be made. And I could see this. I could see Mike saying, look, we're not going to make the loan ourselves. What we're going to do is we're going to work out a deal with, let's just say Wells Fargo, for lack of a better term, or Goldman Sachs or something like that. We're going to work out a deal where we're going to secure cash loans for you on behalf of you at Goldman Sachs, and we're going to use our Bitcoin as collateral to secure that loan at Goldman Sachs, and we're going to take some of the interest. We're going to take a cut of the interest that you pay every month to service that loan. That I could see. That honestly, that makes sense. But I could also see him doing venture capital stuff. But at one point or another, Michael Saylor and Strategy are going to have to make moves to start generating revenue. People are losing their appetite for buying preferred stock out of Strategy. And they are certainly tired of being diluted in their common stock. And that is actually going to be coming up in the second part of the show. But for now, let's talk about the price action. The biggest long liquidation of the year happened yesterday and today. William Suberg, Cointelegraph. Bitcoin was already giving traders a run for their money as the last full week of September began. After a flat weekend, BTC price action flipped volatile with a snap dive to $112,000, according to Cointelegraph Markets Pro. Traders were split on the significance of the move. Some warned of further losses, while others eyed a rebound to new local highs after a downside freakout. Quote, key level being retested after claiming it at the start of the month, end quote, said trader Gel, reacting in a post on X. Gel described the support retest at 112,000 as a very clean retest while demanding a return to 116,000. Yeah, take all these numbers with a grain of salt, except the factual. What people want, don't worry about that. What happened is what we need to understand. Among those seeing the dip as the start of a broader correction was fellow trader Captain Fabic. Quote, I already warned back in August that buyers would get trapped, and exactly that happened. Late buyers got trapped, and since then, Bitcoin has dropped 13% as part of his X post. He continues on and says, from here, I'm expecting another bearish leg that could drag Bitcoin down towards the 100K zone. An accompanying chart showed a breakdown of a rising wedge structure on the BTC USD daily chart. Crypto commentator Whale Panda remained dismayed at BTC price weakness in the face of both gold and U.S. stock markets hitting fresh all-time highs last week. Quote, this last week, we had $890 million of net inflows from ETFs, and Semler bought more, he said, referring to the U.S. spot Bitcoin exchange traded funds and business intelligence company strategy. Quote, Bitcoin is flat on the weekly with a rate cut and all other assets, stock indices, gold, etc., closing a very green week. It almost seems like there are more than 21 million Bitcoin in circulation. Yes, he's referring to Paper Bitcoin Summer, which we're out. Actually, I think today, in fact, I believe today is the first day of fall. Makes sense for all this, doesn't it? Anyway, it may have bottomed out at 112,000 after reaching only 2.8%, but the overnight dip on BTC took a large toll on traders. Leverage was in the spotlight Monday as about $3,000 of BTC price downside delivered over $1 billion in liquidations. Everybody that got longed got shredded. Just, wow, stop playing with leverage, people. How many times do you have to get wiped out before you go, you know what? Maybe this isn't healthy activity for me. Maybe I should take up a hobby like fishing or hiking or something. But my God, data from monitoring resource CoinGlass put the liquidation figure at $1.7 billion. Not just one, 1.7 billion in 24 hours at the time of writing, with longs making up $1.62 billion of that. Holy shit. The biggest long liquidation so far this year, CoinGlass confirmed to followers on X. On-chain analytics platform Glassnode revealed that longs were especially vulnerable in the $113,000 area. Reacting trader Dan Crypto Trades noted that a chunk of open interest worth $2 billion had been erased as a result. Quote, a big wipeout across the board. Now we wait and look for strength within the chaos, he concluded. Well, looking ahead, some market participants see conditions worsening before a market recovery, and among them is crypto investor and entrepreneur Ted Pillows. That can't be your real last name, dude. Anyway, he warned that BTC price would target a large block of bid liquidity before the move. Quote, BTC has over, what this looks like. That can't be right. What? Hold on. He's saying $2 trillion in long liquidations between $106 and $108,000 level. I think this should be 200 billion. I think there's a misplaced. I don't think it's 2 trillion. I think this is a typo. Anyway, quote, a sweep of this level, the $106 to $108,000 level, seems highly likely in the coming weeks before any big upward move. Well, the Federal Reserve's preferred inflation gauge is due for release again this week as markets bet on fresh interest rate cuts. The Personal Consumption Expenditures Index print for August will round off several days of insight from Fed officials. This includes a speech on the economic outlook by Chairman Jerome Powell himself, and that will come tomorrow, Tuesday, at the Greater Providence Chamber of Commerce 2025 Economic Outlook Luncheon in Warwick, Rhode Island. After the Fed cut rates for the first time in 2025 last week, markets will be focused on further cues from Powell over future policy trajectory, with risk assets hoping for a more dovish tone. The latest data from CME Group's FedWatch tool shows the expectation for the Fed's October 29th meeting firmly point towards another 0.25% reduction in the federal funding rate. In the latest edition of its regular newsletter, The Market Mosaic, trading resource Mosaic Asset Company warned that such a result is anything but certain. Quote, updated projections from the Fed points to a couple more rounds of rate cuts before the year is out, but those projections are far from unanimous. Of the 19 officials providing forecasts, 7 saw no need to cut rates further. The dual threat of rising inflation, along with recent weakening in labor market data, are dividing central bank officials. Rumors of a United States political announcement this week with implications for Bitcoin and altcoins are also under scrutiny as BTC price suffers. Okay, so before we, and this is all in the same article, but I wanted to break this part out specifically because I saw a lot of chatter on Nostr, and I saw a lot of chatter, actually way more chatter on X, about this supposed political announcement on Bitcoin coming tomorrow, the 23rd of September, Tuesday. You got people like, Dennis Porter. He's throwing out videos about this important political announcement. I'm calling straight up bullshit. That's my gut feeling. My gut feeling is that this is going to be a massive nothing burger and that we should disregard all of it. And that, in fact, this may have, because so many people, so many different people on X and other platforms all at the same time started talking about the September 23rd's big political Bitcoin announcement, it makes me, the word coordinated comes to mind. And as always, you sell the news. So you got $1.7 billion just wiped clean. You got a floor right now of $112,000. And all of this is in the face of all these big, huge accounts, way bigger than my account will ever be, saying things like, on the horizon, big political announcement. Well, let's see what these rumors might hold. In what some suggest is classic market front running, crypto markets are falling after reports of a massive political news event circulating on social media. The exact nature of the announcement is unknown. Bullshit. But in an X post on Sunday, Dennis Porter, CEO and co-founder of digital asset policy lobby Satoshi Fund, did not mince his words. The move, due Tuesday, he claimed would, quote, oh, I love this, reshape the trajectory of Bitcoin politics, end quote. Now, here's Dennis Porter's actual tweet, word for word. And it's in all quotes, by the way. No, not all quotes. All caps. It's important, y'all. It's in all caps. That means it's way more important than pushing the caps lock button on your keyboard, right? anyway, massive political news coming for Bitcoin Tuesday that will reshape the trajectory of Bitcoin politics. This will be a defining moment. Oh, and he's got an American flag on his tweet. That makes it important. That and the capitalization. Crypto has become sensitive to promises from U.S. political circles in 2025, thanks to the initial buzz and frustration over the strategic Bitcoin reserve. As Cointelegraph continues to report, the idea remains far from forgotten. Quote, I still think there's a strong chance the U.S. government will announce this year that it has formed the strategic Bitcoin reserve and is formally holding BTC as a strategic asset. Alex Thorne, head of firm-wide research at Exchange Galaxy Digital, wrote on X earlier this month. Thorne argued that the market had underpriced the likelihood of the SBR becoming reality. Last week, United States lawmakers met with crypto market executives, including strategies Michael Saylor with the SBR, reportedly under discussion. Okay, this is all bullshit until they actually say, and maybe this is what they say tomorrow. I doubt it. I honestly, honest to God, I doubt the following occurs. But unless they say the United States has found out a way to purchase Bitcoin, put it in the strategic Bitcoin reserve, here's how we're going to do it, and it's already been done. And then they announce how much Bitcoin they bought. Anything short of that is bullshit and a massive nothing burger, and none of these people should ever be listened to again. They can't be trusted. All they seem to me is to be market manipulating, and I'm just kind of done with it. So I'm calling out their bullshit. It makes me feel filthy when I have to read all this crap, which is why I go to SoapMiner.com to get my soap. I need to get clean from all the rubbish that just got poured on me, and I depend on SoapMiner at SoapMiner.com to do exactly that with this handmade tallow soap. It's homemade. It's tallow, and you can go shop for it at SoapMiner.com. You can get a Comfrey tallow bar. You can get Earl Grey soap. You can get goat's milk, lemongrass, orange, and clove, and redacted, and rough cut. And you can even get lip balms. And soon on his website, he's going to have 100% beef tallow deodorant, which I've never used, but I can't wait to order a stick of that from him, because it's either going to make me smell like a cow, which I actually don't mind, or it's going to make me smell like, fresh, which is exactly what I expect, because using SoapMiner soaps has done wonders for the skin on my hand. I wash my hair with it. I shave with it. This stuff lasts forever as long as you keep it high and dry. I highly and strongly recommend that you go get one of those soap, little bar soap mats at like Walmart or something that's got the little spikes on it that keeps the soap out of the water of the soap dish that inevitably occurs, because that ruins soap. Whether it's a crappy piece of bar soap from, Lever USA, or it's the finest soap that you've ever held in your hands at SoapMiner.com. You can get 10% off of SoapMiner.com products if you use the coupon code Bitcoin and. That's right. Use Bitcoin and in the cart's coupon code box for 10% off of your total purchase. This is the Circle P. The Circle P is where I bring plebs like you with goods and services to plebs just like you who want to buy said goods and services in Bitcoin. And that's exactly what he does. In fact, he only accepts Bitcoin, and I think people really don't understand that. He's not going to take your fiat. He's not going to take your PayPal. He will, if whatever method that you can use gets him Bitcoin, that's how you're going to get your soap, because you're not giving him United States dollars. No. You've got to be selling your goods and services in Bitcoin to be in the Circle P. Now, let's do this one. Where are we on time? Okay, we are already way over time. So what I'm going to do now is we're going to run the numbers, and then I'm going to reset some of these stories. CNBC Futures and Commodities, West Texas Intermediate oil is up 0.03% to $62.70. Brent North Sea down a quarter, 66.53. Natural gas is not doing well at all. I can only assume that it means that we are in for a mild weather, but it's down 2.5 to $2.81 per thousand cubic feet. That's not a good price for people producing natural gas. Gasoline itself is up a quarter to $1.97 a gallon, and Murban crude is down a point to 68.71. All of your shiny metal rocks are screaming. They are on fire. They're like the afterburners are on full because gold is up another 1.8% to 37.73 and 3 dimes. Silver is up 3%. Platinum is up 0.6. Copper is up 0.16. And palladium is up almost 4 full points. Ag, on the other hand, is doing very, very poorly, mostly in the red. The biggest winner is coffee, 0.4% to the upside. Biggest loser is chocolate. It's 4 full percentage points to the downside. Live cattle, however, is screaming, 2.15% to the upside. Lean hogs, 1 1/3 in the green, and feeder cattle in the green as well, 2.6% to the upside. The Dow is relatively mild this morning, 0.13% to the upside, 46,710. And the S&P is up 1/3. The NASDAQ is up almost 1/2, and the S&P Mini is in the red, 0.11%. And as we all know, Bitcoin's not doing well today, $112,500. That brings us back to a $2.24 trillion market cap, and we are sub 30 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,924,504.3 of, and average fees per block are low at 0.02 BTC in fees on a per block basis. There are 20 blocks carrying 104,000 unconfirmed transactions waiting to clear at high priority rates of 3 sats per VByte. Low priorities get you in at 1. And mining is, a new all-time high on hash rate, 1.08 zettahashes per second. That's quite a jump in hash rate. So what's going on? Well, these are kind of like weekly or daily averages. So we might see a dip in mining come tomorrow, given this price action that we've got. A reminder that you can go sign up at bitcoinandshow.com. That's bitcoinandshow.com. That's my website. That's the website for the show. If you give me your email, I promise I won't give it to anybody else. But go to bitcoinandshow.com, sign up for the email, and you will get, you'll get like a little newsletter that accompanies the episodes that I drop. I haven't done it. I didn't do any of the episodes last week, but I'll start up again this week. You will get those, and I promise I will not give your information away to anyone, nor will I sell it. From Don't Get Ticked and a couple of other ones. I got some boostograms here to read to you. Wartime with 133 sats says you can rebalance your son's channel by accepting an out-of-band payment in cash from him and then paying a lightning invoice of his through that channel. Yeah, it does work. Axelrod with 900 says, I really enjoyed the piece about tick spreading disease through experiment or thought experiment. Another great Bitcoin adjacent topic that was thought-provoking as well as entertaining. Keep up the good work. I appreciate that, Axelrod. Wartime with 133 says, cheers. And that's it. So donations extremely low as of late. It's kind of disheartening. So donate to the show. And that's one of the other things that you can do at bitcoinandshow.com. Go to bitcoinandshow.com. You can sign up. You can throw me $50 for the year just to support the show. If you get value from what I do, it'd be appreciated if you show that value back by throwing me some boostograms, stream me some Satoshis, or flat out throw your fiat at my website and get the $50 buy, and you will get the same thing that you get if you sign up for free, but you support the show. And supporting the show is important because donations have really been sucking lately. Anyway, that's the weather report. Welcome to part 2 of the news that you can use. Bankrupt exchange FTX is set to repay $1.6 billion to creditors starting September the 30th. So here in 8 days. Okay, now I keep dropping this news on you because it keeps getting dropped on me. But remember the theme for today's show. What's not being said? Let's find out what Christian Sandor doesn't say in this one from CoinDesk. FTX's bankruptcy estate is set to release $1.6 billion of funds to creditors at the end of the month, marking the third major payout following the crypto exchange's implosion 3 years ago. The FTX Recovery Trust, which oversees the bankruptcy process, announced on Friday that payments will begin September the 30th for creditors who have completed verification steps on the FTX claims portal. Funds will be routed through service providers BitGo, Kraken, or Payoneer. What a dumb name. And are expected to land in accounts within 3 business days of September the 30th. U.S. customers will receive 40% in the latest round, bringing their total recovery so far to 95%, according to the press release. Quote, .com, end quote, customers, users of the exchange's international arm will see an additional 6% payout for 78% in cumulative distributions. General unsecured and digital asset loan claims are set for a 24% payout, raising recoveries to 85%, and convenience claims will be paid out at 120%, exceeding the face value of what was owed. God, this smells bad. The September distribution follows earlier rounds that has returned over $6 billion to creditors, part of the process aimed at recovering assets to users of the once prominent crypto exchange, which collapsed in November of 2022, pushing the crypto industry into a deep bear market. Sam Bankman-Fried went to jail. Yes, we know all that. So what was not said? What is never said, especially in these FTX stories? Are they selling Bitcoin at this moment in time? Are they selling shitcoin numbers 1 through 12 at this time to get the cash? Because a long time ago, we knew that they had mostly already sold all their crypto. And yet when we see these new stories come out from outfits like CoinDesk, it is never mentioned. And almost everybody is always, especially after the liquidation event we saw early this morning and late last night, especially after that, fear is in the market. So here comes another story that's like, oh my God, another $106 billion in liquidations. Not so fast. What Kristen is not saying is that a lot of this liquidation was done years ago. In fact, I had to go all the way back. What was it? All the way back to episode, 803. I'm on 1173. Today's episode is 1173. I had to go back all the way to episode 803 to find this one, to find this next story, right? So from September 29th, 2023, like 2 full years ago, they were talking, Cointelegraph was talking about FTX's $3.4 billion crypto liquidation and what it meant for the crypto markets. So bankrupt crypto exchange FTX has been approved to liquidate nearly $3.4 billion worth of crypto assets, creating a sense of panic among crypto investors. But experts say the phased liquidation schedule will ensure market liquidation. Guys, they've already, almost all of these have already been sold into cash. And that's why I've got a little bit of a beef with the people out of CoinDesk. And actually not just CoinDesk, any time that I've brought you recent FTX news and they've talked about, hey man, The repayments are coming. They're on the horizon. What they never say is, by the way, about 85% of all this shit was already sold, right? And we don't really have to worry about it as much this time around. So please understand that when we go through these stories, when you see stories or when somebody tells you, like Dennis Porter screaming on X about this political announcement about Bitcoin is going to be a defining moment, nothing burger. But other news from down south, specifically in Bolivia, that this could actually move the needle. Toyota and Yamaha and BYD are all accepting, well, it's not my favorite, but USDT to tackle a dollar shortage. Oh, Atlas 21 coming out swinging. 3 global automotive giants have begun accepting payments in Tether in Bolivia, responding to the country's drastic decline in United States dollar reserves. The announcement came from Tether CEO Paulo Ardoino, who confirmed the implementation of this new payment method. Operational confirmation came from crypto security company BitGo, which documented the first purchase of a Toyota vehicle in Bolivia using Tether. Images shared by Ardoino shows dealerships displaying signs promoting USDT as an easy, fast, and secure payment option for car purchases. BitGo also announced its strategic partnership with Tether and Bolivia Toyota to facilitate self-custody of funds and ensure secure transactions. Until June 2024, Bolivia was considered one of the last countries in Latin America hostile to cryptocurrencies. However, the critical economic situation pushed the government to reconsider the stance, lifting the long-standing ban on digital assets and authorizing banks to process Bitcoin and stablecoin transactions. The first sign of this shift came in March, when the state-owned oil and gas company, can't pronounce it, but it's their state oil company, received government approval to accept cryptocurrencies for fuel imports as a solution to the growing U.S. dollar shortage. Data from Trading Economics paint a worrying picture. Bolivia's foreign currency reserves have collapsed by 98%, dropping from 12.7 billion US dollars in July of 2014 to just 171 million US dollars in August of this year. This collapse has led citizens and businesses to seek more stable alternatives to the local currency. Fears of losing purchasing power in the national currency have pushed many Bolivians to favor the US dollar or, increasingly, stablecoin. The country's main bank described digital assets as, quote, a reliable and viable alternative to traditional currencies, and retailers in Bolivian airports have begun pricing essential products in USDT as a strategy to navigate the currency crisis. Gabriel Campa, Tower Bank's head of digital assets, explained to Bitfinex how Bolivian import businesses are using USDT to bypass the US dollar shortage. The process involves purchasing stablecoins locally or via offshore bank accounts, converting them into US dollars to pay foreign suppliers, and then determining the product prices in USDT. This says a lot more about than just Bolivia and Bolivian, dealerships accepting Tether. The US dollar shortage in Bolivia should raise all the red flags, because what have I been saying about Tether? It's going to be the way the United States prints enormous, exorbitant, eye-watering, hubristic levels of frickin' debt and export it to the poorest nations on the planet who need it the most. And who needs US dollars the most? Well, right now it seems to be Bolivia, doesn't it? And they are not going to be the only Latin American country that ends up in this boat. A lot of the Latin American countries, whether they're like, who's our favorite guy? El Salvador. Like El Salvador, was on a U.S. dollar standard. They don't even have their own fiat currency anymore. They haven't had it for years. They just use the dollar. Now, El Salvador may not be seeing a dollar shortage, But I can guarantee you that more than Bolivia and El Salvador use the United States dollar in these countries in Latin America. And these countries are going to start running out of dollars. And then they're going to be, oh, well, we need more dollars. And the United States government's going to be there to help. It's going to be like, you thought the IMF and World Bank was like the nightmare fucking twins from Stephen King's The Shining movie, right? The little twins in the blue dresses. Come play with us, Danny. That's the IMF and the World Bank. No. You ain't seen nothing yet. You ain't seen the shadow of death of Beelzebub that's standing behind those girls, which is the U.S. debt printing machine and the ability to export it now that we've got Tether. I'm telling you, man, this story is speaking a lot more to me about that than it is about, oh, look, see, even Toyota's taking crypto for their cars. That's not the important part. The important part is that Latin American countries are running out of U.S. dollars. You can bet your bottom dollar that Tether is going to be there to print as much as they can, and they are going to buy every Treasury bill and bond that the United States Treasury prints. It's going to be glorious right before the fall. Anyway, U.S. and U.K. is teamed up to create crypto-focused task force to guide further regulations. Oh boy, this should be fun. Coming out of the block, written by Sarah Wynn. Top financial officials in the United States and United Kingdom, including U.S. Treasury Secretary Scott Bessent and U.K. Chancellor of the Exchequer Rachel Reeves, have launched a joint task force aimed at developing policy recommendations for digital assets. Oh, this will be fun. The so-called Transatlantic Task Force for the Markets of the Future, that's the name of it, will look into short to medium-term collaboration as well as longer-term coordination for digital assets. The group will also release a report in 180 days on crypto and broader digital market innovation, according to a statement released on Monday. Quote, the task force is to report back to both finance ministries via the UK, US Financial Regulatory Working Group on recommendations to enhance collaboration on capital markets and digital assets and other innovative financial activities, Treasury Department officials wrote. Quote, these recommendations are to be developed in close collaboration with industry partners, ensuring we unlock opportunities for investors, businesses, and market participants on both sides of the Atlantic Ocean. Oh, isn't that nice? The initiative marks a significant move in deepening collaboration on crypto regulation and innovation. And last week, the Reeves and Bessent met. What? The Reeves. It literally says this. Last week, the Reeves and Bessent met to discuss collaborating on crypto oversight. Was it like the Reeves and Bessent families? What, did they meet and have dinner? I mean, are they good friends? Or what the hell are the Reeves and Bessent? What? Editing, people. It's important. There's really not much more about this. It just turns into a soup of suit speak, and we don't need any of it because we've got too much suit speak as it is. But now the US and the UK are teaming up to create crypto-focused task force for guiding future regulations. That's probably not gonna, I don't know, man. All I could think of was those two evil twins in The Shining, the little chicks in the blue dresses. And instead of seeing the IMF and the World Bank like tattooed on their heads, now I see the US and the UK. It doesn't matter. The US dollar in the short to medium term wins. It's just going to happen. Fiat currencies in nations around the world are going to fall like flies. It's going to be replaced by the US dollar. Trump's going to get what he wants. He says he wants a strong US dollar, but he doesn't want it too strong, which is why we're going to print the living crap out of debt. It's going to make people dependent on the US dollar, but we're going to be able to control the dollar strength through the amount of debt that we print. And that third mandate of the Fed, the supposed yield curve control, for lack of a better term, that I was talking about last week, I think that actually takes a backseat to just printing money. But hey, not a Nobel, winning economist over here, so I'm probably just dumb as a post. But I've got good news. Vancouver Firefighter Mental Health Fund is going to accept Bitcoin. Alex Larry out of Bitcoin News. Vancouver Mayor Ken Sim has launched a new fund to support the mental health of firefighters. And for the first time, the city will accept donations in Bitcoin. The initiative was announced at a fundraiser hosted by the Vancouver Firefighter Charities on September the 13th and aims to address the growing mental health issues faced by frontline emergency workers. So then they go, there's a lot of the story that goes into what these guys are actually facing, but we are at an hour right now, and I don't want this to go too long. So the takeaway is Vancouver and Canada in general has not really been. Let me make sure this is the Vancouver that I think it is. It's not really saying. Let's see. Yeah, this is the Canadian Vancouver. There's a Vancouver, Washington, but there's also, so I get confused. Anyway, I'm sorry. Yes. So Canada hasn't been all that graceful to Bitcoin, and Vancouver itself has been, they've been nicer about it than other places, especially like you get further east in Canada and the more hatred for Bitcoin builds. But still, the country of Canada hasn't been too kind to Bitcoin. So now we've got a mayor of one of the larger and most well-known Canadian cities of Vancouver doing this himself. He is not advocating for somebody else doing it. He set the charity up himself. So the Vancouver mayor is himself a Bitcoiner, and that's good news. I'm saying we're going to end up with some good news. But then we go right into strategy. Their shares fall after the Bitcoin giant reveals $100 million Bitcoin buy. We're going to finish off the day with Logan Hitchcock out of Decrypt. Shares of leading Bitcoin treasury firm Strategy are down 1.4% amid the news that the firm spent $100 million to acquire 850 Bitcoin last week at an average price of $117,344. So at 112 or below 113. Well, actually, anything below 117,344, they're underwater on that buy. But trading at $339.80 a share, MSTR is now down 5.2% in the last month, underperforming Bitcoin itself, which is only down around 1.6% in that time. Now, here's why I'm bringing this to you, because it's like, David, this is another treasury. It's the same treasury company. They're just buying more Bitcoin. But how did they buy this Bitcoin? Did they sell a bunch of product to get revenue to buy the Bitcoin? Oh, no. No, they didn't. Here's how they made the latest purchase. The firm used around $19 million in proceeds from its STRF preferred stock offering, but here it is. And more than $80 million in net proceeds from its existing $21 billion MSTR common stock offering. It's a dilution event that's going on. Now, this is kind of like says, hey, this was already planned. Yeah, I know. I get that. But what I'm saying is that strategy is just kind of becoming commonplace to dilute your common shareholders. There's only so much beratement that a human being can take financially before they say, fuck it, I'm out. And if the common stock shareholders flee MicroStrategy because they're tired of being diluted, they don't want to. I'll bet you there's a whole bunch of guys that have been holding MicroStrategy stock before it became Strategy. They don't care about how much Bitcoin per share they have. I mean, it's part of a metric of the performance of the company, especially now that they're not doing pretty much anything else. Yeah, it's kind of become important, but there's other fish out there to fry. Shit, I can go buy Strive, ASST, if I wanted to, because they just bought Semler. And why is that important? Well, I told you, because Semler actually has real revenue coming in. They make money. They have a product. They put it on the market and people said, I like that product. I'm going to trade you this money for that product. And then Semler takes that money and divvies it up and pays their people some of it. And then they buy some Bitcoin with the rest of it. That's how you should act. And for me, until Strategy comes up with a plan to fundamentally generate revenue without having anything to do whatsoever with Bitcoin, unless they start making loans for like I said, like say, hey, we're going to loan you this money, but you're going to take the loan through Goldman Sachs. We're going to secure that loan for you. And we want, I don't know, 0.25 basis points off the top. So we're just going to add that to your loan but we'll be the one to securitize it. And then you have collateral that you use to securitize with us. Now, if they're going to make revenue on the interest rate, okay, that's functional. It's usury, but it's functional revenue, and it's not up at the 18 to 20%, levels, which is where U.S. legal structures start identifying things as being usurious. In the Old Testament, usury is you can't charge any interest rate. You loan your neighbor the money to get by. Your neighbor pays only the principal back. Now, that's been bastardized over the centuries. I get it, but usury is any interest rate at all. But until Strategy can demonstrate that they can make some money without selling shares of preferred stock and without diluting their common shareholders and make money the old-fashioned way by offering a good or service to somebody else who requires that good or service and offers to pay them actual money that they can then buy Bitcoin with, at that point, then I'll say, okay, I'm on board. But it's been too long that Strategy hasn't had any plans to generate revenue outside of Bitcoin. And I'm getting kind of sick of listening to it. Right? So it's another common stock shareholder dilution event. They only bought 100 million. Hell, even Metaplanet bought a lot more Bitcoin than Strategy did. What I'm seeing is that the appetite for all these preferred stocks are going away. And these companies better get their ever-loving shit together and do it real quick. Strategy is going to have to make some revenue. And they can't do it by selling debt. I mean, they can, but they're going to have some other revenue generating mechanism. Otherwise, even somebody as big as Strategy can go away. Don't think that they can't. They can. I hope it doesn't happen, but even if it does, I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.